Information is the single most important resource in the world today, and organizations take their information very seriously. It may be instructions, requests, transactions, or reports. They need to be passed between departments and personnel in a timely and efficient manner so that the organization's goals can be achieved. Information is usually recorded in ways that allow for them to be stored and retrieved, viewed and analyzed by the members of an organization. The recorded information is called a document. Documents are either stored physically by writing or printing the information on sheets of paper, or stored virtually as computer files saved on disk. Because these documents carry vital information, they must be handled with care to avoid damage and loss of information. In business, information is mostly about money coming in or money going out. Consequently, documents in an office usually fall under two categories: sales documents and purchases documents. Purchase documents. You will recognize some of these documents when you buy things online or from your local shops. Invoices, debit notes, and credit notes are examples of sales documents that show that goods and services have been purchased or requested for. They report evidence of cash sales, undercharges, overcharges, goods purchased, and more. The invoice is a document sent by a seller to a buyer for goods or services sold to him and for which he owes him. In other words, it's a bill used to request payment for goods delivered or services rendered. It features a list of the goods and services in the quantities they were delivered, along with prices, credits, discounts, taxes, and total due. It also features business details of the buyer and the seller, date of sale, and any terms and conditions. The debit note is sent by a seller to a buyer to inform him of an outstanding balance he owes, either because he was charged less than he was supposed to pay, or because the payment he made was not sufficient to cover the total cost of a transaction. In other words, the debit note informs the buyer that there is a difference between the amount he was expected to pay and the amount he actually paid, to the disadvantage of the seller. The credit note is the opposite of the debit note. It is sent by a seller to a buyer to inform him of an amount of money he, the buyer, is to be refunded. This may be because the buyer was charged too much on an invoice, or because the seller is unable to deliver the goods or services that were paid for. It can also be because the buyer returned goods because they were damaged, expired, incomplete, or did not match the goods he or she had ordered for.
This order is incomplete.
In other words, the credit note informs the buyer that he is owed money by the seller for an error in the transaction. Purchases documents capture information about goods and services ordered, received, and paid for by the organization. Examples are the order form and the receipt. You might have come across shopping sites on the internet where you can place orders for goods or services. After you have selected the desired items, the site will always ask you to fill a form as part of the order process. This form will collect limited personal data like your name, address, phone number, email. It will also collect billing, payment, and delivery details so they know where to deliver the goods and how the store owner will be paid for the item. After you have completed your order and paid, the seller will confirm the payment and issue a receipt, a document acknowledging that payment has been confirmed for the goods or services ordered. So, in summary, office documents are documents that relate information on the transactions that occur in a business organization. They are evidence of business dealings which must be prepared well and handled with care. The two types of office documents are sales documents and purchases documents. The invoice, debit note, and credit note are sales documents. The order form and receipt are purchases documents. The invoice is sent by a seller to a buyer for goods or services sold to him and for which he owes him. The debit note informs the buyer of the difference between the total selling price of the items purchased and the total amount of money paid for the items. The credit note informs the buyer of the amount of money he is to be refunded for the purchases he made. The order form serves as a request for the specific items a buyer has decided to purchase. The receipt is simply an acknowledgement by a seller of payment received for goods or services sold. If you enjoyed this video, hit the like button, drop a comment, and subscribe to our channel. You can also turn on notifications to stay updated on new videos on this channel. This Brain Friend video was brought to you by Synforest. For more of these amazing e-learning videos, get your copy of Brain Friend. With more than 1,000 e-learning videos, over 74,000 test items in more than 40 subjects, a career counseling guide, and many other amazing features, BrainFriend remains your foremost e-learning and exam preparatory software. BrainFriend. Learn better, make excellent grades.